Paul, we had a video come out on Tuesday. It's talking about a company that was supposed to do really great. All the other YouTubers were telling you, rocket emoji, Paul. This one's going. This one's headed there. Rocket emoji, just like Nikola, like Neo.
Oh, what is Nikola doing now?
Like Tesla. Lucid merged, and the opposite happened. We went over it. I got very heated, Paul. I got sweaty, and the patrons were laughing at me. They said, "Take a breath, Seth." But then the unthinkable happened, Paul. The beloved workhorse, this to-the-moon stock that every other YouTuber just said, buy, 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 buy. Who cares about fundamentals? Forget about evaluation. It's happening 100%. Paul, you're getting roasted in the comments again that the workhorse will win. Although they can't make 5 cars in a day, they have a huge backlog, Paul, of 8,000 vehicles in the pipeline here over the next 5 or 6 years. And sure enough, it didn't happen. Oshkosh won out on the Postal Service and their fleet of trucks, vans, and delivery.
And who is Oshkosh partnering with?
It's funny you ask, Paul, because when we talked about the Lucid merger, I gave fans what I thought was a revealing look at a bunch of different companies. One that made billions of dollars a year, been around for 100 years, and one called Lucid that hasn't done anything and had a very similar evaluation.
Valuation.
Valuation.
You keep saying evaluation.
My apologies.
That's
Valuation, yep. And so, sure enough, they did not go with the Cincinnati company. Paul, I love Ohio. I want Workhorse to be the best thing ever.
Of course.
I'll let it. I'm patient enough, as you've taught me, to let it be the best thing ever. Look at the numbers, trust the process.
Well, there are no numbers, but...
And then maybe invest in it one day. But sure enough, Paul, they went with Oshkosh and their partnership with good old Ford.
Ford? Wait.
You're shocked?
The government went with a company that had a track record of building millions of cars a year that work, instead of going with a company that's never built a car, that is actually, they're hoping to be able to build 5 a day.
Surprise.
Ford builds 5 a minute.
Yes.
I mean, pretty much literally. No, actually more than that.
Yes.
It's just, I mean, I don't understand. Like, and now everybody's probably, then of course, my ego got to me.
Go on.
I went back to the CCIV video, and I went back to the people who talked smack to me.
Didn't you?
And I made some responses. Now, guys, keep in mind, I'm not right on everything. I'm going to be wrong on a lot of things. But I will say that if there's 100 CCIVs, and I bash all 100, you will be lucky if 1 or 2 of them work out. So I'm okay saying that and bashing people and all that stuff. Ebix came out with fraud, and somebody's like, oh, you were wrong in Ebix. I'm like, listen, I was wrong in the sense that it was fraud. I was not evaluating it for fraud, but I'll take that's fine. But if I evaluate 100 companies like Ebix, there's gonna be 1 or 2 that have fraud, right? So I look at it going...
And we're jumping around a smidge, but Workhorse also, as Trader Mo said in his Morning Before the Bell live stream, that Workhorse is now under some investigation for fraud as well.
So this is what happens whenever things don't work out. People will blame others, and say, I saw it in the real estate crash. All my friends who invested in real estate with managers, they were all happy when their checks were coming in. The second the checks stopped coming in, they lose the money. Oh, it was fraud. So it was fraud only when they started losing money? No. It's always been fraud if you think it's fraud now, because their process was fraud. And by the way, I don't believe it was fraud. I think it was just people being stupid. There's a big difference between fraud and stupidity. But with Workhorse, guys, and Lucid, did you really think the US government, with how powerful the UAW is, the Union of the Auto Workers, do you think they were going to sit there and say, you know what?
Let's let some small company
let this one go.
that has like 17 employees in Cincinnati. Let's let this whole contract go.
Did you really think that was going to happen?
So Paul, if we don't get to it soon here, someone's going to say, why skip to minute 3 to start the video. But so Oshkosh got the contract. It's an infinite contract.
And can you please explain that Oshkosh is not what I thought?
Yes,
which is Oshkosh
because,
Bagosh.
Yes, you still wear Oshkosh Bagosh, and if you're not old enough to know what that is, it's like old jumper, like an old jumper.
Is it for kids?
Yeah, I think it's still around, right, Don? Wouldn't you say?
Yeah,
it's
still around.
Yeah, so I used to wear it when I was a kid, little jumpsuit, little.
Yeah. Didn't you wear that at your wedding?
What's that?
Didn't you wear one at your wedding?
Well, you were the ring bearer at my wedding, so I had you in one of those little seersucker Oshkosh Bagoshes. Regardless, Oshkosh basically got the contract. When I say basically, is someone on the news, I was watching an article, and it's, is it finalized? And the guy said, well, it's kind of finalized. It's like, okay. But here's the key, Paul. And so you were surprised to hear this, which I'd like to, so we're in a unique situation, Paul, in that, like you said prior to taping this, and maybe you've heard that, maybe you thought this at home, I had never heard of Oshkosh. So obviously all the hype was around Workhorse, but this company is somewhat new to us, and it may be new to you. What we'd like to do, Paul, we're in a unique position in that we can use our 8-pillar analysis on this company, but guess what? The guessing game and speculative nature of moving forward seems like it's kind of in the books here. And so is this a quote-unquote growth company that might be guaranteed to grow, or this is another company like Workhorse that could fall flat on its face if they can't produce? And so these are the questions that our viewers and myself might ask. So Paul, I challenge you. Let's get into Oshkosh and take a look at it.
Oshkosh is a $7.7 billion company. Now, that means nothing in and of itself, but the next stat I want to show you, revenue in the last 12 months, $6.7 billion.
Look at that.
They have revenue, guys.
How nice. Don.
So refreshing.
Don, they make money. I mean.
Well, that's revenue. I didn't say they make money yet.
Okay, sorry.
They have revenue.
Keep going.
But the good news is their net income last year was positive. So their PE is 24, so it's an X to start.
A little high.
And their profit margin's 4.7%, X to start.
So we want the PE above 20, folks, and we want that profit margin above 10. So it's 2 X's to start.
You know what I love about our software?
Oh, that's right, Paul. This is the Everything Money
This is the
software.
Everything Money software. Here's what I like about it. Versus Y charts, I can look at the data that matters to me immediately. Look at this, guys. Net income is $318 million. You go one column over, free cash flow in that same time period was $730 million. So free cash flow was significantly higher than net income. What does that tell me, Seth?
Well, I don't want to jump the gun here, Paul, but I mean, that free cash flow looks nice in comparison to their general market cap.
My God, are you learning?
You said it would be dangerous if I finally learned. So let me just play stupid. I have no clue what that means, Paul.
This tells me that there's probably some sort of accounting. We have to look at the free cash flow over the last several years to see if this is an aberration, or this could be some random aberration too, where they had some write-off that's non-cash expense, like they bought a business years ago for $500 million and realized, oh shoot, it's actually worth $100 million. Let's write off $400 million.
Okay.
But these are the great things you can do with our Everything Money software. Okay, dividend yield 1%.
How cute.
And just like everything that's perfect for you, right below the dividend yield is how much they pay in dividends. And why do we care about how much they pay in dividends?
This is wonderful, and an advantage over Yahoo Finance and Y charts, Paul, is by seeing the dividends paid right next to the free cash flow for the last year, they can obviously afford that dividend and perhaps increase it, perhaps?
Correct. So guys, what we did here was people always think that dividends are guaranteed. They are not. You have to look at how much the dividends eat up of your free cash flow, because free cash flow is used to pay dividends, buy back shares, make acquisitions, do other big investment things in the company. Right now, they are able to cover this dividend by a factor of 9 to 1 according to last year. So far, guys, we have some negatives, but I cannot sit there and say this is a no automatically because the free cash flow and the net income are so different. Guys, if you want to understand about how you can get access to this software, wait to the end of the video. Seth will explain it. It's wonderful. You cannot get the software anywhere else in terms of the 8 pillars. This is awesome. Let's go to the next thing. So far we have 2 X's.
Pillar number 3 is revenue growth over the past 5 years. This is part of the process, folks. We want to know, is their revenue growing?
Okay, 6.24 to 6.74. It is a check. However, we look in between, Seth.
I like that.
6.2, 7.2, 7.9, 8.3, 6.7. Now, this 6.7 though was during COVID. So what we can do here is we can make this about this whole thing right here. What I've created is I'm doing this by 4 quarters at a time. It happens to be the full last year, but this is another example of something that maybe last year the reason their income fell so much was because of COVID, because their revenue fell. They kept growing from 15, 16, 17, 18, 19, then fell.
Look at that.
So again, I'm not opposed to this. I'm looking at going, okay, there's more to the story than just that.
I like how the deep massage you're giving on Oshkosh.
I'm giving it the nice massage. If it asks me for a happy ending later, I just might give it.
Speaking of happy endings, go ahead and tickle that thumbs up. Paul's in look at this outfit on Paul. He looks like I don't know what to say anymore, Paul. You look incredible. Tickle that thumbs up and tickle his little rear.
England.
He loves it. Folks, this is a comedy.
that's from?
This is a comedy show first. No, is it Pee Wee
Wayne's
Herman
World
or something?
2.
Oh, Wayne's World.
Like, where are you going? England.
Pillar number 4, Paul, let's get back on track here, is profit growth over the past 5 years.
221 to 318. Again, 221, 322, 524, 546,
Wow.
318. So
Something happened
this
last
makes
year.
me believe this is COVID related, and I'm not going to even worry about last year, guys. This is what you got. When everybody says to me, all I care is about numbers, it's absolutely not true, because this number right here is telling me this company's too expensive. But I'm looking at it going, wait a second. Everybody lost money last year, essentially, right? Everybody made less money. I'm basically not going to look at 2020. I'm going to go understand more about the company, but let's keep going.
Okay, but pillar number 5 is shares outstanding. We want this going down.
Now, the shares outstanding number here on our software is a little inaccurate. We're talking to our developers. This is still the beta mode, but it'll still tell you the general idea. 295 million, it's actually like 60 million versus 272, which is like 55. So it's a check mark there. General idea is the shares are still going down, and that is accurate.
As a patron, you'll get access to the software, and we're going to be beta testing this. This is not for full release for another 2 months, actually, so you're getting a sneak peek at it, and it looks fabulous, Paul. Pillar number 6 is current assets over current liabilities.
Now, current assets, guys, is basically cash on hand. Yes, it has inventory and other things on there, but for all intents and purposes, let's call it cash on hand. 3.75 billion versus current liabilities, which is debts are due right now, 1.7 billion. But here's the best part, guys. Their total liabilities as a company is 3.08 billion. So they have enough cash on hand to pay off all of their debt. That is like you at home owing money on your car, your house, your credit cards, your student loans, everything, and you have enough money in your checking account to pay it all off.
It does so far look surprising that the government would go with this company over workhorses. I'm really shocked here. Pillar number 7 is free cash flow. Now, Paul, we spoiled that free cash on the first metric page of the Everything Money app software. And let's get
And
after
here is where this is why we do more in depth, guys.
Look at this.
So free cash flow is cash from operations less your capital expenditures. To make it easy, this free cash flow line is not actually a line in the real investing statement of a cash flow statement. But to make it easy for our users, I put it in here anyhow so you can just look immediately. 476 to 732, which is a check mark. However, Seth,
Look at this.
476, 86, 222, 308, 732. It is all over the board. It is all over the board. So this is kind of I'm not going to go off of last year's free cash flow number. What is the average, Seth?
364, including last year. So take that out, we might have some issues.
But look at even 2016 was a weird year. It was a huge year. It's the highest year in the last. So the question becomes here, what factor do you use?
It's tough.
This one is tough, and this is where the art of investing occurs, guys. You have to go understand, why do they have 732 million in free cash flow? You would go up and you would look at their numbers here in the cash from operations and see where everything was different. See where there are big differences here. So right here, changes in working capital was a huge difference. It went from a negative to a positive. So really, if you account for that being a negative again, you're probably looking at more like, it still could be $400 some million of free cash flow, 300 some million. So Seth, what's your average?
360.
So 360, but now we're going to take out, if the the working capital change was about $400 million difference, call it 450 over 5 years, there's an actual average of 270 a year.
Okay, you like 270 for the average free cash flow?
Now you guys are probably looking at this going, what the heck did he do?
I am too.
I took at the last 5 years average and I subtracted out the one really random number that changed over the last, you can clearly tell that over the last 10 years, it's usually a negative number, but we had a positive by a huge number. So I'm gonna go equate this out to about, actually I should probably do more than that. This is probably 250 a year, to be honest with you. 250 a year. The company is currently at 7.7 billion, is that what it is?
Yes.
Divided by 250, Seth.
Oh boy.
That's what, 31?
Divided by 250.
30.9? 30.8.
It is 30.8.
Boom!
How do you do this?
30.8. So it's an X on the free cash flow number over the last 5 years. Over the last year, it's 10 times. So this is one of those situations, guys, where You're going to ask me, is this a buy or not? First off, it's never a buy or sell immediately upon looking at the 8 pillars. What it is understand the 8 pillars tells you a story. The story I'm seeing is that their free cash flow and net income were huge differences last year. So you need to do more research on what caused that change. But I will say this, I don't dislike this company.
Yeah.
I do not dislike it. If you can if you feel comfortable after doing your research that they're going to have $350 or $400 million a year in free cash flow and growing, I think the company right now is a buy. If you really feel comfortable that their free cash flow going forward will be that. And with this new deal with Ford, if it goes through, I mean, that could lead to a lot of free cash flow growth, at which point this might be a very, very solid company to invest in. Am I telling you to buy it or not? Of course not. I'm not telling you to do anything except for do more research. Go figure out what exactly this future of this company looks like, how their deal with the government and with Ford would actually affect the numbers of the company.
I figured I was going to get more heat in this, Paul, because, you talked about, just a few days ago, we talked about, comparing car companies like a Lucid to a GM. Oshkosh has 16,000 employees. Workhorse has 118. 118 people working there. And folks, if this idea of looking at math and coming up with a process, say, for example, if this is the first time you've ever seen us, I know you're probably stunned by how handsome I am. I get that a lot. But beyond that, the math of looking at a company might be very new to you. And Paul, I told Don before, I'm getting so enraged that so many other YouTube pages can justify these numbers by looking at nothing. They just look at.
They claim they do research. They don't.
It's beyond.
This is more research than any of them would do, and I tell you, this is not even enough research. And you might sit there and say, "But Paul,
it's too much. You're too strict. There's too many rules. We'll never buy anything."
Guys, join our Patreon. There's Discord in there. You'll be able to talk to. There's over 1,000 Patreon members right now. You'll be in your own chat with 250 people, and you guys can all do research together. Everybody, and it's a great community. We have thousands of messages being exchanged every day now. It's absolutely incredible. There are levels, and there'll be a video at the end of this. Or not? No,
we're not doing that for. So, guys, you're in luck because we're splicing in a new video of me, sort of promoting the Patreon for our live stream.
Well, why are we promoting it, stuff?
This is where I'm going to, Paul. Is like you're absolutely right. The community that people are gathering, the community that we're putting together on the Discord channel and Patreon, we've gotten incredible reviews, responses. People are making tons of money. They're paying for their yearly Patreon in the first month. We have one
user who has learned options from us, and they're making $4,000 a month now. Just because they joined our Patreon. That's one user, and he's in the super shorts chat, which is $250 a month.
Oh, I got one that can beat you. I just interviewed one of our patrons who didn't start investing at all until last October and is now writing options contracts this month.
Wow. So here's the deal, guys. You get the software for free as long as you're a Patreon user. You got to join. The lowest level is $13. You're crazy if you don't join. It's $13. On Yahoo, just to get this, forget about the 8 pillars, forget about all the extra stuff we're going to do on here, real estate calculator, the app, just to get this is $30 a month. For $13 a month, you get the Discord, you get this, you get discounts on all of our products. And when I say all of our products, all of Crossroads Group, the main company's products, we sell vanities, we sell light fixtures, we sell tile, we have luxury homes in Mexico for rent. All these things you get, it's literally crazy to not join because this price is only going up. It was $8 2 months ago, then it went to 12, now it's 13, and it's on its way up to 30, 40, 50 bucks at some point in the future. I'm rewarding those who started early. I wrote a message to the Patreon. Listen, I'm just sitting there telling you, like, literally, you're nuts for not buying this. You're giving yourself for $13 a month. And here's the best part. Look at this, guys. Here's your 8 pillars section. If you just want to be lazy and go in here and see which 8 pillars are there, it's right there.
Yep.
It's right there for you. You don't have to do any math yourself. It is right here.
Final take on Oshkosh, Paul.
I like it in the sense of doing more research, but yep. I think if this Ford thing works out for them, this is going to look like a cheap company right now. If this Ford deal happens and they end up becoming the provider this is going to be a cheap company right now.
Yep. All right, folks. As always, take a thumbs up, subscribe, check out our Patreon. We love you. Thanks for watching.